Hello everyone. Today, first let's discuss what is this new SEBI's FPI rule and its details, and then we can discuss our regular 24th Jan 2024 pre-market stuff for Nifty and Bank Nifty. If anyone wants to read the full SEBI FPI rule, please have a go. I will attach the link in the description below. First of all, it is not new. It was already announced in SEBI regulation from last year August 24 itself. So stating it as new was the wrong one. Then you might ask why I am explaining this now. Because I think it possibly impacting the market and it might impact the market in the next few days as well. Anyway, what is this? Basically, SEBI certified DDP custodian like HSBC Bank or HDFC Bank or Yes Bank, etc. Whoever facilitating FPI's transaction settlement should categorize the FPI as low risk, medium risk and high risk. Here, low risk FPI means government and government related entities such as central banks, sovereign wealth funds, etc. Medium risk FPI means pension funds and public retail funds like foreign mutual fund kind of with a wide and diverse investor base. And all others categorized as high risk FPI. So most of the big known FPI foreign portfolio investors comes under either on the low risk or medium risk categories. Basically, they don't need to declare any and these SEBI regulation don't apply to them at all. However, all other high risk FPIs it's applicable. I mean, if they invested more than 50% of their total asset in one single stock, then they have to diversify those within next 90 days or else they have to disclose the granular details like why they hold it, who are they, kind of, etc. For example, if I have 10 crore rupees means, then through FPI without disclosing, I can invest my 5 crore rupees in any one single stock like in HDFC Bank. If I want to invest more in the same stock means, then I have to do the disclosure that I'm holding this stock and I'm nowhere related to the promoter or to the company, all those details. Under 50% of my asset, I can invest on anywhere. Above 50%, I can invest, but I need to disclose the details to SEBI and to public through the DDP custodian. Similarly, if my total asset is above 25,000 crore rupees in the Indian stock market means, hopefully it will happen one day, then irrespective of my holdings, I need to disclose all the details completely. I hope I'm not confusing. So, SEBI surveyed as per this rule on 31st October 2023, they found some FPI breaching this regulation. And for them, they gave 90 days as the grace period. I mean, till 29th January 2024, they have to either reduce their portfolio to the required threshold or to disclose it as per the guidance. If they fail to oblige this, then their FPI account first it will get frozen, then after grace period it will be deleted. I mean, I have been doing this pre-market video for almost 1.5 years. Unless it's a FII or MSCI index rebalancing, all those other times FII gross purchase and gross sales value usually between 7,000 crore rupees to somewhere around 12,000 crore rupees. That's their general trade value, and if you see the last week trade value, it was always way higher, around 20,000 crore rupees every day. Of course, apart from last Saturday. So I really wondered why it's increasing, but last week I thought it's because DII getting more money through SIP, hence FII also bringing the more money kind of. Now it looks like they are reshuffling their portfolio to become compliance or to avoid disclosure. I mean, I took the snip from Economic Times. As per unofficial estimation, this FPI disclosure will make the fund outflow of at least 1.5 lakh crore rupees to 2 lakh crore rupees in order to be compliant. Personally, I think this is a good rule. It will reduce the manipulation, but still bigger firm can do the manipulation, not the big individual, I presume. Whatever, again, I'm not saying it's just a negative for the stock market. It can be either way, but till this January end or at least till this coming Thursday, we might see this elevated FII trade volume. And also, I'm not saying it was the only reason for the yesterday's massive fall, but I think it got its massive potential as the influence. Now, coming to our regular pre-market stuff, last night US market mainly driven by the quarterly earnings related. I mean, Johnson & Johnson, 3M and General Electric, all three big Dow Jones Index companies were significantly down because of their poor earnings forecast or guidance. However, on the positive side, earlier yesterday, Bank of Japan kept the interest rate very low and decided to continue their economic stimuli package, which further improved the global momentum. In fact, yesterday, it's just only Indian market that was down like crazy. All others, Asian market and European market, all traded in a positive bias because of this Bank of Japan's decision, which made the Japanese yen stronger against the US dollar. Even Israel stock index dropped only 0.5% despite the escalation. So, this positive global momentum supported S&P 500 to reach fresh all-time high value. Overall, US market closed mixed. Dow Jones down marginally 0.25%, S&P 500 increased marginally 0.29%, and Nasdaq up by 0.43%. Regarding VIX, surprisingly, despite the volatility, it dropped 5%, down from around 13 to 12.5. Moving on, about oil and gold, it haven't changed much. At the time of this video, WTI crude trading around $74.5 US per barrel and Brent crude trading around $80 US per barrel. In case of gold, it's $2,030 US per ounce. Coming to Indian ADR, Infosys, Wipro and HDFC Bank all three closed in line with the Indian market. Whereas for ICICI Bank in Indian market, it closed positive of over 1% due to the positive quarterly results, but in ADR it dropped 0.5%. Overall, now ADR is just lagging the Indian market, so I would say it's the mixed trend leaning towards the negative. And for GIFT Nifty, early morning today it closed at 21,268, equating with the spot market indicating the flat to positive 30 points opening. So that's all about the global market. Now coming to Indian market. First, regarding earnings, Axis Bank, Karnataka Bank, Tata Elxsi, L&T Finance, Havels India, where some of the major Indian companies released their Q3 results in the aftermarket hours. In this, only L&T Finance posted good results than estimation. All others in the top line financials haven't. Especially Axis Bank, not massively. Their net profit comes as 50 crores below the estimation and their NPA dropped and revenue increased. Those were positives. But on the slight concern, net interest margin comes as 4.01%, which was 10 basis points lower compared to September quarter. Still 4% NIM is good in the present scenario, but not as good as ICICI Bank. Just for info, at present, Axis Bank trades at higher PE ratio than ICICI Bank. As a summary, US market closed on the positive bias and GIFT Nifty also indicating the gap up opening of 30 points. But the way yesterday's price action, it's difficult to judge any. Let's hope for the calm day and also please be cautious on the stocks where FII is holding a huge position. Then as per stock open interest, ONGC, Bajaj Finance, Burger Paint, DLF, Bank of Baroda and SBI Life Insurance got an increase in open interest along with a negative close indicates the short build-up. On the other hand, long build-up is very small list since yesterday the advanced return ratio was just 0.27. Simply 73% number of stocks in Indian market closed negative. So only Airtel, Cipla, Bajaj Auto, Sun Pharma and Godrej Consumer are the very few stocks that got an increase in open interest along with a positive price close. Then about the things to look out. Today, Bajaj Auto, Tata Steel, TVS Motor, Canara Bank, Indian Bank, DLF, Indian Oil Corporation and Exide Industries are some of the major Indian companies' earnings results are scheduled released today. Here, please note, Canara Bank and Indian Bank are the first major PSU bank going to release the earnings, so that will influence the whole sector, particularly SPI. And in terms of macro, during the market hours, around 2 p.m. to 3 p.m., whole Europe, Germany and UK's manufacturing PMI data is scheduled to release, and in the aftermarket hours, US PMI data and crude oil inventories data are some of the items we need to keep an eye out today. Coming to technical, yesterday because of this big 500 points intraday fall, on the daily chart, Nifty formed a long bearish candlestick which engulfs almost the complete pullback rally. Now, in addition, the daily and hourly momentum indicator has a negative crossover. All indicates a sharp downward reversal and Nifty started the next leg of the fall. So, if Nifty breaks the 21,000 mark, then on the downside, it is likely to drift lower towards 20,870, which is the 38.2% Fibonacci retracement level for the rise it had in the last few months from 18,838 to 22,124. If Nifty bounces, then 21,400 will be the immediate resistance. In case of Bank Nifty, it played a big role as 11 out of its 12 index stocks closed significantly negative. Like Nifty on the daily chart, it also formed a long bearish candlestick pattern, hence the momentum is completely against it. At present, it's trading around 450 points away from its 200-day exponential moving average of 44,560, which is very much crucial and critical for further downside. And the immediate resistance is at 45,500. On the monthly options front, the maximum call option open interest was at 22,000 strike, followed by 21,700 and 21,500 strike, with new call option writing at 21,300 strike, then 21,400. Thus, the options data indicates that Nifty may face resistance at 21,300 to 21,500. Whereas on the put side, the maximum open interest was at 20,500 strike, followed by 21,000 and 21,200, with new put option writing at 21,200 strike, then 20,800. Hence, with immediate support at 21,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.